The US dollar index, also known as DXY, has had a strong inverse relationship with Bitcoin, meaning when the dollar falls, Bitcoin rallies. When the dollar strengthens, Bitcoin usually struggles. And this isn't just theory. We can see it clearly on this chart showing the price of DXY in Bitcoin. For example, in January 2017, March 2020, and October 2022, the dollar dropped sharply. Each time, Bitcoin went on a massive rally, and we saw the exact opposite in January 2018 and May 2021. Both times, the US dollar was strengthening, and that coincided with sharp declines for Bitcoin. The inverse relationship between the US dollar and Bitcoin exists because Bitcoin is often listed in US dollar pairs across most major exchanges. Let's look at a simple example. Assume that the US dollar and the euro are trading at parity, meaning that $1 can be traded for €1. If Bitcoin costs $100,000 when 1 US dollar equals 1 euro, then Bitcoin also costs 100,000 euros in Europe. Now imagine the US dollar weakens by 10% against the euro. This means the same $100,000 Bitcoin would now cost 90,000 euros in Europe. Europeans would see Bitcoin as being on sale, making them more likely to buy it. That can lead to a significant increase in capital flowing into Bitcoin from Europe. But this doesn't just happen in Europe. When the US dollar gets weaker, Bitcoin becomes cheaper for people in all other currencies too. And the opposite happens when the US dollar gets stronger. Using the earlier example, if the US dollar strengthens by 10% against the euro instead, then Bitcoin would cost 110,000 euros in Europe. This would make it more expensive for Europeans to buy Bitcoin, and they would instead want to sell their Bitcoin, since they can get more money for it. So when the dollar strengthens, the world is more likely to become a seller of Bitcoin.